Hello everyone, welcome to this webinar. My name's Chris Brown. I'm the founder and director of Brown & Co Accountants. It's nice to welcome you all. Today we're hosting this webinar with Alice Garvey and Amy Cotton from Capsize. They're our funding partner. And what we're going to be doing is just giving you an overview into how to raise, recover, protect your business capital. And really, this is a really important aspect for any business, whatever stage it's at. And also, we're just going to have a look at some of the details around the new recovery loan scheme backed by the government as well. So to take us straight in, we'll hand over to Alice first to take us through. Thanks, Alice.
Great, thanks, Chris. Hi, everyone. Nice to meet you. I'm Alice, Partnership Manager here at Capsize. Been working at Capsize for about 2 years now. Started off on the funding side of the business, and now I work as a Partnership Manager. So I work with about 30 accounting firms across the UK to help them roll out capital advisory as a service line in their firms. So I've been working with Brown & Co, with Chris, Jake and the team for nearly a year now. And throughout that time, we've had lots of success raising around £750,000 for their clients, as well as helping identify opportunities to both recover and protect that capital in their businesses as well. So today, if you could just pop to the next slide, Chris, we're going to run through the agenda. So firstly, just an introduction to what Capsize is, the different ways we can help, and then we'll go into a bit more detail on the raise part of the business, the different funding types, a bit on the recovery loan scheme. We'll look at ways we can help businesses recover capital. So that's to do with kind of late payments and bad debt credit control. And then finally, protect capital. So taking a look at credit improvement there and how important it is to make sure you're checking the business credit of your business as well as your personal credit. And then we'll kind of go on to see if there's any questions, and Chris will talk about kind of next steps if you do have anything to ask. So without further ado, if you could pop to the next slide, please, Chris. Cool. So Capsize, who we are, what we do. So it's divided into kind of 3 sections. So we started off very much as a funding platform, and throughout COVID and as we've grown as a business, we've actually realised, as well as raising and how important that can be to helping businesses in the UK, it's also really important to look at recovering and protecting capital in the business as well. So within raise, we can help clients with funding. We can also help with grants. So we partner with a consultancy who can look at that, and Amy will come on to talk about that in more detail. We can also help with recovering capital. So any cash that's tied up in late payments or bad debts, making sure we're identifying that to Chris and Jake and your accountants at Brown & Co to make sure you're aware of that if you do need to put a payment plan in place. And actually, if you do want to look at ending that relationship with the client and recovering that debt, we can help with that. So I'll come on to talk about that in further detail. And finally, the protect side of things. So making sure you're really protecting that capital in your business. As I said, looking at your credit score, and if there is ways we can improve that, we can help with that. So I'll come on to talk about that as well. So that's the agenda for today. Could you go to the next slide, please, Chris? Perfect. So I'm just going to run through the various funding products we can help with, starting at the top. So we've got trade finance. This is more of a legacy type product to do with kind of import and export finance. So any of you guys out there in the wholesale sector, maybe manufacturing, if you import or export out of the UK, it's typically basically what lenders do is they look at the purchase orders. So if you receive a large purchase order from a customer and you need help fulfilling that because you don't have the funds right now to do that yourself, you can use that order as security, and typically lenders can finance about 80 to 90% of that. So really useful to bridge that working capital gap, as often you might not get paid for 3 to 6 months if you are in that kind of import-export sector. As we go through, I'm not going to go over rates because that can change in the market. But if you do have questions about rates, please reach out to Chris and the team, and we can give you an indication of that. Next, we've got merchant cash advance. So this actually originated in America, this product, also known as kind of retail or revenue finance. Really useful for any of you guys out there in the e-commerce, hospitality, leisure sector who take payments via terminals such as WorldPay or PayPal. So if you've got a card terminal there, whether that's online or in store. Essentially, what the lender does is they look at the monthly income through that terminal and then can lend about 1.2 to 1.5 times that amount to you. And then your repayment is done by an agreed percentage or split, as they call it. So it's really, really useful for any businesses that are seasonal or see kind of trading dip in certain parts of the year, because you're not tied to that fixed term loan repayment. We've recently actually done a £5 million merchant cash advance line for a big high street brand, so it might be relevant for you guys as you start to kind of trade again and you need a bit of capital to secure that and make sure you start on the right foot. Next, we've got working capital finance. So as I'm sure you're aware, this has been dominated by the CBILS loan scheme and the bounce back loans, and now the new RLS scheme, which Amy will come on to talk about. But essentially, working capital is a very straightforward product whereby you need to release cash that might be eating into kind of everyday expenses and eating into your profits as a result. Our unsecured facilities start kind of from about £10,000 up to £250,000, and then secured facilities can be in the millions with kind of debentures in place for that. Working capital is also talking about overdrafts here. In terms of terms, for those loans, it's anywhere from a year to 5 years, but generally for kind of recovery loan scheme, we're looking at a 5-year term. And all sectors really, this is applicable to. Next, we've got invoice finance. If you've got a significant debtor book and you need the cash far sooner than your invoices are being paid to you, you can finance about 80 to 85% of those invoices. There's actually 3 types of invoice finance products. One type might suit you better than another, so I'll just run you through them quickly. So we've got invoice factoring, where the lender takes the element of credit control, as well as financing 80 to 85% of the value of those invoices. It's a whole debtor book type facility, and actually the lender themselves do the chasing on your behalf, so you don't have to chase that. Discounting is another similar whole book type facility. The only difference with this one is that the element of credit control remains with you as the SME or business, so you'll do that chasing, so your customer might not be aware you have a facility in place. Last but not least, in terms of invoice finance, and slightly new to the market, is selective invoice factoring or spot financing. Essentially, you pick and choose what invoices you want to finance. Maybe you have those few debtors who take up a large part of your debtor book and you want to finance just those ones. It can work out to be a bit more expensive if you use it over a large period of time, just worth noting there. Also worth noting for all of these invoice finance products, it can only be for financing invoices raised upon delivery, not those upfront ones. In terms of sectors, we're looking at wholesalers, manufacturing, haulage, recruitment, but quite a relevant product as we trade out of COVID, as companies want to kind of bounce back far sooner than they would via the organic growth. And you might want to kind of plug those cash flow gaps that you've seen creep up over the pandemic. Next, property finance. This can be anything from bridging, development loans, commercial mortgages, but also looking at buy-to-let. So even if you have some property portfolios in your own name, not part of your business, we can help with that. It's relevant, yeah, to any of those kind of investment plans as well. If you've got some cash and you want to look at investing, do have a conversation with us. There are different LTV loan to values depending on the type of property and product. As I said, do reach out if you want to hear more about those, what we're seeing in the market at the moment. Last and very not least, asset finance. So anyone who's got a car on hire purchase, finance lease, these are both forms of asset finance. Essentially enables a business to purchase or refinance any business equipment and spread the cost over an agreed period of time rather than having that lump sum payment. It's structured in a way that any money lent to you is secured against the asset until the balance of the truck, for example, whatever the equipment might be, has been repaid. Plant and machinery is something that's been thrown into the limelight, especially recently due to the new super deductions. So Brown & Co can assist you on the tax efficiency side of things, but we can help with the financing and purchase of any assets if you do want to take advantage of those allowances. In terms of industries that are capital intensive, manufacturing, haulage, as well as kind of the agricultural industry, there's been quite a lot of pent up demand for this as businesses start to reopen and kind of need that extra equipment to drive things forward. Next slide, please, Chris. Cool. I'm going to hand over to Amy now, our head of partnerships, to run you through the recovery loan scheme, the features and how it might differ to kind of CBILS and that sort of thing.
Hi, everyone. Yeah, so I'm really excited to talk to you about the recovery loan scheme because I think it's going to be something that's going to be really, really helpful for businesses to get back on track and back to their growth plans. So on the 3rd of March in the budget, it was announced that CBILS would be ending and that recovery loan scheme would be coming in. And this scheme is running until the end of December 31st to be exact. And what's really, really great about this scheme is that it comes without personal guarantees. So if we look back pre-COVID, any business who was looking to take out a loan without a personal guarantee, unless you were quite established, huge amounts of EBITDA, it would be really, really difficult to secure this kind of lending. And if you could, you'd be offered 12-month facilities with 20 to 40% APRs, which were incredibly, incredibly expensive and hard to keep up with. But, you know, it would save you from putting personal skin in the game. So the huge benefit of the recovery loan scheme is that you don't actually have to put up a personal guarantee, which means that you can actually fund your growth without having to worry about that. And so if we're looking at the scheme chooses you, you don't choose the scheme. So any business who has a really, really good credit rating, who's got tier 1 lending appetite, you know, the chances are that tier 1 will offer you normal commercial lending minus, you know, sub 5% lending. And so those facilities are still available for businesses, and tier 1s are very much so using the recovery loan scheme as a last resort. And so we've got a ton of alternative lenders in the market, and you know the rates are capped at 14.99%, but we're seeing them as low as 6%, with the average coming in around 9%. So even if we look at you know, if you've got a 50K bounce back loan and you take a 50K recovery loan scheme at the highest rate, you're looking at about 100 at 100 grand of lending, but a blended APR of about 8.75%, which is quite a reasonable rate, especially given that pre-COVID, every £1 borrowed put £3 back into the economy. So if you are looking to grow the business and get back to business as usual now that we've unlocked, it's going to be a really great way to fuel that growth. So some of the ways that you can use the scheme, if you're in construction, we definitely know that there's been inflation because of Brexit, higher cost of jobs up front. So you could use the recovery loan scheme to get some capital into the business to be able to take on new contracts. If you're in e-commerce, you can use it to buy stock to fuel that growth. And you know, the other thing I would say on the scheme is it's a great time to take advantage of it, because if we look at what happened after 2008, the big crash, big banks used to lend to everyone before that, and they never really came back in the same way. They pulled skin out of the game. They were worried about the recovery, and you know, so they were only lending to a very small portion of businesses as compared to before. And if we look at the beginning of COVID, most lenders retrenched from the market until the government schemes were offered up, because they wanted to see what happened. So come January, we're not entirely sure what's going to happen in the lending sector, what's going to be available, what the rates will be, how the personal guarantees will be. We assume that they're going to come back in a big way. So if you are looking to do some borrowing, feel free to chat to Chris or us, and we can help walk you through the options of the recovery loan scheme.
Great, thanks, Amy. I think the next couple of slides just kind of go over what's the same as CBILS and what's kind of different. But as Amy said, what's the same is that there's no PGs up to £250,000. You can borrow a max of 25% of 2019 turnover. There is that kind of cap on interest rates, and you can get different products. So as well as term loan, you can look at asset finance and invoice finance. And then in terms of what's different, if you just click the next slide, please, Chris. So yeah, obviously the interest and fees to be paid by the business from the outset. You don't have that year repayment holiday, so that's really worth taking into account here. And you can actually get facilities that start from a lower amount. So £1,000 for invoice finance, asset finance, 25,000 for term loans and revolving credit facilities. And then that goes up to £10 million as kind of a cap. And there's no secured product in that, and no turnover limits. And you can have a CBILS as well as an RLS, as long as you don't go over the maximum 25% of your 2019 turnover. And something we would say on this is that lenders are looking at your figures for kind of 2020 and 2021, as well as basing their underwriting on the 2019. So if your 20 and 2021 figures are showing you in a better position, it's definitely worth putting out those management accounts to the lender as well to support that application. Great. We're just going to go on now to talk a bit about grants. So I'll hand over to Amy again to run on to this, and then I'll talk about recovery and the protect side of things.
Great, thanks, Alice. And yeah, grant funding is, I think, a really, really amazing way to get money into your business so you can work on new innovative projects. So if we look at last year, we were all sent home. A lot of businesses were shut down and didn't really know what they could do to generate revenue. We saw a lot of businesses pivot and start new projects, try new things. If anybody saw the budget this year, the government is hugely doubling down on innovation. There's the super deduction, there are new pots of money coming available. And so if you are a business who is looking to innovate, looking at grant funding will be able to get you some money into the business, which is effectively outside of the money for writing the grant, free money to help you unlock that growth. So, up to this point, 397 million of grant funding have been secured by Innovate UK for micro SME businesses. They secured on average almost £200,000 per project. There's up to 50K up to 4 million in grants available, meaning these could have a transformative impact on a business, and grant applications can also lead to R&D tax claims. So if you're thinking about anything in the healthcare sector, the clean tech sector, any of these things, and trying to start new projects, it's worth speaking to our partner granted consultancy. And the reason why we work with a consultancy is because there might be up to 40 different pots going at any given time, and they'll know which pots are lending to what industry and how they're weighted. And they'll be able to talk to you about the type of projects that you're taking on and how much you should be applying for and who to speak to effectively, and they can help you write the grant application. So what we can help out with is innovation, funding, and also just regular day-to-day grants. So yeah, Granted are a really, really great source of people to speak to help you unlock that growth.
Great, thank you, Amy. Chris, if you could just move on to the next slide, please, and I'll talk a bit about the recover side of things. So as I said, as well as helping businesses raise capital, it's really important we look at recovering and protecting that capital as well. So if you look at kind of your debtor book, you want to make sure that your clients are paying you on time, and if they're not, you have a kind of a clear kind of payment plan in place, and that's not slipping. If clients aren't paying you, there's kind of two reasons we think why that's not happening. So either they can't pay, or they're paying someone else before you. So you really want to make sure you've got those strong relationships with your customers, because obviously if you're not getting paid, that can impact your business, your cash flow, but also it might mean that you're not paying your customers and your clients on time too. If you could just move to the next slide, please, Chris, and I'll run through a bit more about what Capsize recovery is. So if we look at kind of the SME market, about 96% of that will suffer a bad debt or commercial dispute in their lifetime. And actually 1 in 5 businesses will cancel off an average of 31,330 of unpaid bills. So this is kind of the background here. There's a lot of kind of people not paying on time, and obviously COVID has worsened this as trading has kind of taken a massive downturn, and businesses have been struggling. But as we kind of look to trade out of COVID, I think people are doing a lot of reconciliation and looking at their debtor book and actually thinking, okay, out of my client base, do I really want to continue relationships with these people? Maybe there's been some work you've done for someone and they haven't paid you. You don't want to continue that relationship, and maybe you want to look at recovering that before you decide to write it off completely. So what we do is we partner with a company called Escalate. So they're a national law firm, and they can essentially help you with these disputes, and look at recovering that in terms of what they can recover with the bad debts and late payments. They can get you back 70% of that amount. So to give you an example, I was recently working with one of my accounting firms, and they kind of raised this to their client, who actually had £30,000 worth of money kind of sitting in that written off stage. They'd kind of moved on from it. There was a dispute, but they couldn't get resolved. So they just kind of completely written it off. The accountant went to them and said, okay, why don't we look at Escalate through Capsize? And actually they got back 70%, so that's £27,000 for their business. So the cost of that being kind of 30%. But actually the great thing about Escalate and how it's different from a lot of lawyers that you might go to for this kind of service is there's completely no risk involved. All the way up to the High Court, you are covered and fully insured. So you'll never kind of pay more than that 30% there. In terms of what debts we can help with, it's anything above £1,000, but that can be made up of smaller amounts that add up to £1,000. And debt can be no older than 3 years. But in general, you can recover approximately 40% more than going it alone. So how we can help with this, your accountants at Brown & Co are very proactive in looking at your debtor books, seeing if there's anything sitting in late payments, bad debts, and we're always having conversations about feeding that back to you guys. But also if you do have any kind of bad debts you've written off in the past 3 years, do bring that forward if you want to look at recovering that. We can always have a chat to talk through process ahead of going through with the actual recovery side of things, but hopefully a useful product and service to be aware of to you guys. Final product, if you could go to the next slide, please, Chris. So this sits within kind of Protect. If you wouldn't mind tapping again, Chris, and it will bring up kind of the different points on that one. So if we look at kind of the market and the state of play in terms of credit in the UK at the moment, there's more credit checks happening than ever before. Even if you kind of made it through COVID, potentially you kind of cut costs, furloughed staff, maybe you pivoted and actually boomed and are on the right track now. It doesn't matter how you did that, but embarking on a new business venture will always mean credit checks are happening. So those kind of clients and customers you're signing new contracts with, they're going to be doing credit checks on you ahead of embarking on that business venture. As well as that, if you're looking to grow, you've got new plans and you're looking for funding, obviously lenders are going to be looking at your business credit as well as your personal credit. And actually a lot of kind of small SMEs, micro entity companies who don't file full accounts might be hit with a kind of poorer score there because the agency can't see the full state of play of how you're performing. So a lot of you kind of smaller businesses might see your business credit as lower than you might expect. So I'll just run through the 3 kind of different stages of this credit scoring, and then I'll talk a bit about our company Lightbulb we work with and how they can help with improving that score. So 30, a score under 30, kind of in the red zone, we look at this as kind of a kind of D and below. So getting funding approval will be very difficult. You might not get approved, it's quite unlikely. Suppliers will struggle with credit insurance, and potential clients will be less likely to do business with you guys, as I mentioned. Anyone in the orange zone, so 50 and under, kind of a C section we call it, it could be subject to high funding rates, and suppliers will be subject to high insurance rates. And then 70, the green zone, kind of B and above to A, could be missing out on the best funding rates. Obviously within this, your credit limits might change according to what your score is. But essentially what we can do through your accountant, through Capsize, is look at your business credit score, give you an idea of what the outside world is thinking of you when they do these searches and what lenders are thinking of you as well. And then what Lightbulb can do is produce a free credit report, which tells you what each of the 5 credit reference agencies thinks of you. So we've got Credit Safe, Equifax, Graydon, Dun & Bradstreet, and Experian. So they'll produce that report for you completely free of charge, give you an idea of that, and then tell you, okay, we think we can get your limit and your score up to X amounts. They'll produce a hurdle. And then at that point, if you want to proceed and they don't manage to improve the credit score to that hurdle, you won't pay anything. So no risk in terms of that. And pricing wise, for any businesses turning over 1 million or less, it's £1,000. Anything above £1.5 million turnover, that's £1,950, and anything above 2.5 million is £2,850. But in terms of how Lightbulb really do this, as I said, a lot of these small businesses file micro-entity accounts, they're not showing the full figures, and actually it's done via an NDA. So Lightbulb might request full accounts from you guys, management accounts, bit of information about change in directorship, why that might have happened, because that can be a reason why credit score can be reduced. And then they'll present that to the agency, and the agency will look at that and say, okay, I've got a better idea of the business now, I'm going to improve that credit score for them. You'll pay that fee if it gets the amount, and then as a result you've got your business in a much better position to the outside world. They can see exactly what's going on there in terms of your credit scoring, and you'll be subject to kind of better supply terms, better contracts, and better funding approval rates if you decide to go for funding. So really useful product. Do reach out to the team if you want to take a look at that, get your credit report out there, and just have a look at what the universe is thinking of you in terms of credit. And if Chris, you could go to the next slide, I'll just run you through an example of different credit scores and how that can impact your funding and how much you might pay to a lender. If you just tap again, Chris, it will come up with a little fact at the bottom. Perfect, cool. So if you look on the left side here, you'll see an interest rate of about 4%. So this would be for a business who's sitting in the green zone of credit scoring, so a kind of A or B score. You can see they've actually been approved for £200,000 at 4%, as I said. And then on the right, you've got a business with a lower credit score, so kind of in the orange-red zone, and their interest rate is actually 15%. So you can see the vast difference in interest rates depending on the credit scoring. And actually, the business who's got the improved credit rating can save up to £80,000 in interest. So really worth looking into this, and especially considering that lenders will look at a 12-month average of credit scoring. You really want to get ahead of the game if you are going to look for funding in the next 12 to 24 months. Get the credit report out there, look at improving the credit to give your business the best chance of securing the funding you want, and to save as much money on interest as possible. So hopefully that is a useful product, and that covers off the kind of protect side of Capsize and how we can help with that. Chris, if you would mind going to the last slide, I'll run over how the process works at Capsize and with Brown & Co too. So we've gone through all the kind of product services we offer in terms of how we kind of get down to the end result. You've got on the left here the conversations you might be having with your accountant. So perhaps you're talking about your plans for the next kind of 6 months, and maybe you're looking to grow, maybe you're looking to buy new premises, maybe you've got some business equipment you want to release capital from, perhaps you want to really make use of the recovery loan scheme with no PG before kind of commercial normal lending with PGs comes back into play come January. So these are all the conversation points, and obviously your accountants are having these advisory conversations with you and bringing insights to meetings. So that's that on the left. From that stage, after you're speaking to your client manager or partner, and if you do decide to kind of go ahead and take a look at one of the services we offer, it will feed through to us here at Capsize. Essentially, we have like a tech platform that your accountant has access to, and what that platform does is it matches you to a relevant specialist and a relevant service depending on your business, the figures and kind of credit as well. So depending on what it is, you'll also get assigned a specialist from Capsize. So myself and Amy, as partnership managers, to do with kind of head of partnerships, which Amy's doing, is working with the accountants to help them roll out the service. And then we've got funding specialists who look at both the unsecured funding and secured lending. We've also got kind of people who work in the corporate finance sector, and then those who look at doing the kind of raise, recover and protect as well. So you'll be assigned to a relevant specialist depending on which product you're looking at, who have great experience and great expertise in what they're doing. So that's kind of how the matching process works, and that specialist will keep you involved in the process as much or as little as you want. So if you want your accountant to do all the kind of liaising with us and with the lenders, that's absolutely fine. If you want to be involved in that process from start to finish, you also can be, and you have access to the platform to see the progression, see the results, what offers are coming back as well. We actually find when the client's involved in the process, we have a 90% approval rate, so really useful if you do want to be involved to get involved, but also if you don't want to, that's absolutely fine. So that's an overview of how the process works, but hopefully that's been useful. I'm going to hand over to Chris now just to run through what to do if you've got any questions and want to talk about this in more detail. with Brown & Co.
Thanks, Alice. That was great. And thanks, Amy, as well, for taking us through that, and the market insights as well, which is very interesting. And it's looking not just obviously at raising capital, which is important, but we've also covered off here how to recover and protect it as well, which is equally as important. So appreciate we've covered quite a lot there in the webinar. But if you do have any specific questions or you want more information on any of those aspects, then just get in touch with me. Just drop me an email. I think my contact details are on there. So drop me an email, give us a call, or if you go to our website, you can actually do a funding search directly from our funding page on the website, and then we can get in touch with you and talk you through the process there as well. So hopefully that's been useful for everyone. Thanks again to Amy and Alice for joining us on the call, and hopefully we'll see you all on our next webinar. Thanks.
Thanks, everyone.
Thanks, everyone.